Hi, it's Stuart McPhee here, and I'm coming to you today from Shenzhen, China, where I'm speaking at an event this weekend, and I'm very fortunate to be joined by a fellow speaker this weekend, Don Schellenberg. Don, thanks for joining me today.
Pleasure.
It's great of you to give me your time today before we both speak tomorrow at the Expo. Just thought I'd ask you a few questions about your approach to the markets to try and help people out there, I guess, put together their own little piece, their own puzzle to trading the markets. Look, for those who have never heard of you before or have never heard you speak, would you mind just perhaps telling us a little bit about yourself and how you got interested in the markets, and I guess the journey that you've taken to get to this point here today?
Yeah, it's been a bit of a journey, I admit that.
Yes.
Some of my first ventures into the market were going back into the early 80s, and they didn't turn out too well.
Okay.
Like a lot of people, I hadn't had the opportunity or the inclination really to study much about investing and the different processes, and the big books looked pretty dry, and I avoided those. But I had some people who were insiders, and in fact own most of the shares in a couple of the companies in Canada where I'm from, and that didn't turn out too well either, because that turned out the fellow who owned the shares, he wanted to get people buying. So I don't know if they salted a gold mine to make it look very attractive and then release news. Said, Don, buy tomorrow morning. It's going to shoot up like crazy. You can make a ton of money. Well, in fact, it did shoot up, but he didn't say when to get out. The place to get out was when he had enough money to buy a new car or a new house, he stopped selling. And then the shares plummeted way down below ground level. So after a period, 2 or 3 experiences like that, I realized I needed more information, more education, and began a process from there.
So that's a long time ago. You've obviously learned a lot of things in that time. If you're talking early 1980s, you must have you been through some times that have been very difficult, and times where you've thought, oh, this is not going to work out for me. I'm not going to make this work, and this is too difficult and more difficult than I thought. Or was there anything like that, perhaps?
I haven't traded constantly through, since 1980. In fact, probably being burned quite badly by the market through my lack of knowledge. I avoided the market for some time, but always intrigued because of obviously the amount of money and potential excitement and interest that goes through this market constantly. My own personal interest is I'm of course asked to do analysis on all kinds of markets. My personal trading interest is more in the Forex, the currency market, which of course is the largest, richest market in the world, and moves very consistently with the methods that I apply.
Funny you should say that, and we're coming from China today. You and I were talking this morning and said that because they can't short sell here China stocks, a lot of them are very interested in Forex because of the ability to trade in both directions, and that was something that really surprised me, and that's certainly your interest. Now tomorrow you're speaking about foreign exchange trading after me tomorrow, and are you able to just share with us a little bit of the key points you'll be covering in your presentation tomorrow?
Sure. My overall view of the market tries to incorporate several different techniques, but I don't think anybody has succeeded in describing market movement better than a gentleman who wrote his books about 7 years ago, and that is R.N. Elliott. A lot of people are intimidated by what they call the wave principle, say it's far too difficult and not worthwhile. Mr. Elliott did not create the way markets move, but he did categorize it quite effectively, and I don't claim to have a total comprehension or that anybody does of what the market is or can do, but these various patterns that he described, and maybe a few more that we've added since then, have been very capable of predicting with high reliability many of the moves that take place in the market, and that includes in this incredible volatile time. And irregardless of the time frame, I apply Elliott concepts as well as Fibonacci, which is a measure that Mr. Elliott actually introduced, because his principle himself, he could not make it profitable for the first 2 years until he applied Fibonacci to a way of measuring how long a wave might be or how long a correction might be.
And so you've, I guess, developed your own methodology using those tools to trade foreign exchange, and that's worked out well for you. And well, that's fantastic, because that's, I guess, the position we all want to be in. That's discovering something that works for us. A lot of the people, you know, out there, and the people we talk to at expos, they're very focused, and understandably so. They're very focused on entry and developing their methodology and their setups and their patterns and the like. Even though you and I know that whilst that's a critical part of developing an overall plan, there are more important things like how we manage our risk and the 6 inches between the ears. For those who are just entering the market and they're very focused on entry signal, do you have any comments or guidance on, you know, where it sits so far as perspective, and or where it sits in priority, I guess, compared to other things? And any, I guess people are looking for that perfect setup. What's your guidance to people looking and trying to develop their own methodology with entry, I should say?
Well, because of the Forex, which these days one can choose the amount of leverage they want to trade with. When I first started trading, there was no choice. It was a standard size, which is 100-to-1 leverage. And that can be very scary until you've accumulated a lot of experience and confidence. And probably because of that, I personally did and continue to do a lot of work on proper entry. Because of the leverage, if you're not entering quite correctly, your risk can be outrageous. Now, combining that, however, with the mental attitude, discipline, and proper risk management, I think you have a pretty good package. But to me, if you have ideal entry and the other things, then I think it puts you way ahead of the crowd, gives you a real trading edge.